So let me proceed to my trading view. Yeah, that's 100. Drop down analysis. All right. So welcome to today's session on top-down analysis. Now, we would recall that we've been talking about trading. We've been talking about support and resistance. We've been talking about demand and supply. We've been talking about other blocks. We've been talking about liquidity. We've literally been talking about diverse aspects in trading. For now, as we are talking about these aspects, we are talking about them one after the other differently, and we are explaining them. But now, if you won't be able to like use all of these things, yeah, you won't know how to use them properly. Like if you can't combine them, it's very important for you to know how to combine all these things, so you'll be able to create your own analysis. And that is why we have the concept of top-down analysis, whereby we'll be able to incorporate everything together. So today I am going to be showing you how you'll be able to put everything together. You'll be able to put everything together. So after this session, if you actually want to follow up and you are new here, it's very important for you to go and start from the first video on trading. Then you'll be able to watch up to the aspect of top analysis, and you'll be able to get everything together. So diving into the chart, or before we dive into the chart, let me use some form of infographics. Now remember we talked about market structure, and we said we have uptrend, which is the basic market structure. We say we have the uptrend, right? We have uptrend, and we have the downtrend. Yeah, this is the downtrend I just wrote here. Now we said we have the uptrend, right? We have the uptrend. Yeah. Now when we have the uptrend, you can't just trade with this alone, because you don't know where to buy from, you don't know where to sell from, and you don't know what to do. Then we proceeded to talk about demand and supply. And we're like, okay, where price is actually coming back to tap in is actually demand zones, or what, supply zones. Yeah, that is what we talked about. Now we proceeded in talking about liquidity, and we explained the concept of liquidity. We said we have uptrend, double top, double bottom, trend line liquidity, and all of that. So moving very fast, I'll dive into my chart and I'll show you how it works. So this is a live chart on NAS 100. Yeah, you can call it US Tech, you can call it anything you want. Now, if you notice this, the way price is moving, price was actually moving in an uptrend, right? Price was moving in an uptrend for a very long time, and the price was moving in an uptrend. What did I tell you guys? I said price literally creates series of what, higher highs and higher lows, higher highs, higher lows, higher highs and higher lows, and that is how price moves. But after this trend, we can see that we have what, we have a downtrend that is forming currently at this moment. And now that is for what, market structure. Now we move to talking about demand and supply. Now how do we combine this market structure and demand and supply? Now you can see that when we're talking about market structure, price will literally go down, it will come back up to tap on this point, sell down, come back into it, tap, sell down, creating series of what? Lower highs and lows. Now the upper part is called the lower highs, the down part is called what? The lower low. Lower highs, lower lows, and that is the basic form on how to identify this thing. But now you can see that okay, when price was forming series of what? Higher high, higher low, higher high, then price was supposed to just come below and create what? Higher low and break past this higher high. But now you look at this one, we have higher high, higher low. But now price broke past or went down below previous higher low. Now it created what? If you have truly gone through the videos we had on market structure, you understand that I said when price break past the previous lower low, then we have higher low, sorry, then we formed what? A lower low, and we are tending to what? To change into a bearish scenario. Now look at this point. When we also talk about demand and supply or other blocks, look at this point. This place is more of what? Like an order block. Yeah, let's just take the full of this. Then you can see that this is what? A supply zone. This is what? A supply zone. Let's label it. Let me label it as what? Supply. And I explain something to it. Supply. Now that is what? A supply. Now you can see that joining market structure and demand and supply, we have the structure. When we see that the market is bearish, we know definitely that price will create what? Series of what? Lower highs and lower lows. After the lower low is formed, then we'll be looking towards to sell again from where? After a lower high has been formed. Now look at this point. You would actually be looking for what? The nearest what? The nearest supply, or the supply that actually what? Broke structure. Now look at this point. This was the move. This move, this straight move here from here to this point was the one that actually broke past the previous higher low that was formed. And now we can say, okay, this point here is what? Our supply. Are we following? Can everybody hear me? Hello. Are we following? Can anybody hear me?
Yeah, continue, boss.
Okay, okay, good. Now look at the next scenario. You can see that after this supply was tapped into, price pushed aggressively and we broke past what? This new lower low that was formed. Now after this lower low was broken, we created a low that was more lower than this point here. And now we can say we have what? A new lower low. After a new lower low is formed, what do we expect? We expect that we have a push upward to what? To form a new lower high. And after this lower high is formed, what do we expect? We expect that this point here push lower to actually what? Take out this low. Now, what did I tell you? This move that actually broke this lower low is called what? A supply zone, where we would actually be looking at what? To get another what? Supply zone. Now look at what happened. Price came into that point and what? Tap into it and sell down. Another what? Supply. And it's as simple as that, combining market structure and supply. So if someone was actually looking towards sell, then we sell from here and we take our profits from where? From this point. Very simple as this, and that is how we trade. If someone was actually looking to sell from the first supply, after price broke this point, you wait for price to what? To start reversing towards your what? The points are actually pushed down towards the break structure, and what? You have your sell and you target the next what? Low, and you have something of this nature, and the what? Price would what? Would sell down immediately. Now in the scenario of an uptrend, in the scenario of what? An uptrend, you let me look for some scenarios. Okay, let me use this point. Now you see that what happened here? Price actually broke this what? Broke this point. After this point was broken, what were you expecting? what move actually was broke this particular point. You can see that when price was coming, it dropped at this point. It pushed upward, dropped at what? At this point. But this is the whole point that actually pushed through to break this structure. Then we can call the whole of this point a what? We can call the whole of this point our what? Our demand. You can now move and what? You can look at this point here. Look at the next higher high that was formed now before price actually what? Actually broke that structure. Now, after the structure was formed, you look for the next possible base zone, which move actually sponsored to break this point. This was the last move that pushed higher. This is just a basic stuff. This was the block that actually break the structure. It's just something very, very simple. We are talking about the basic technical analysis. Though if we should move to the advanced, you understand that there is more to what to it, not just this we are talking about, but you need to understand the list of it, which is what the basics, and when you get the basics, that is all. Now look at this point. When we were talking about types of liquidity, we were talking about equal highs and lows. And look at this point. This point is looking more of what? Equal highs, relatively equal highs. And what happened at that point? Price struggled upward, took out the equal highs and sold down, just the way I was what explaining to you. And now from where did it sell down? From a possible what base zone, more of what? Your resistance when we are talking about support and resistance. And that is how price moves. It's just very simple. So basically, when we are talking about top-down analysis, it's just you combining everything we've talked about. Let's take, for example, when price is in a downtrend this way. Now you expect that price comes up to what? To create a lower high before what? Pushing lower. Now when you have price at this point, what should you be expecting? You should be expecting that okay, this point that pushed this particular point, it was the one that actually pushed forward to break this low. Then where should you be looking to sell from? You should be looking to what? To sell from this point. Very what? Simple. You'll be looking to sell from this point and you what? You set your stop loss, whatever. But probably in next session I'll be explaining how to set up this particular long and short position to know where you be entering from and where you be closing from. So that is how it is. Then you wait, price would patiently come into that point like this. It might be struggling at all these points, but at the long run it will come into it and what? It will sell down, and that is how it works. Now, when this particular point breaks what? This structure, what should you be expecting? You should be expecting that okay, this was the move that sponsored the break of this structure. Then you can say, okay, you want to pick the what? The whole of this point, and you see that price will just come back into that same point to just come upward, tap into it, and break again. And the downtrend continues. Look at what we have here. Let me clear my screen at this point and I show you something. Now, looking at it at this point, what did you notice? You can see that, okay, when we have this downtrend forming, you can see that the whole of this push was the push that actually sponsored to break this low here, this particular low. Now, what happened? Price came down into that point. See, price came down into that point, tap on it, and what? Sold down. Now, look at this point. This whole push here was the one that struggled to what? To break the next lower low we have. And now, see where price came back into. Price came back into that particular point, and what? We sold down. Now, we are expecting what? Price to do what? Price to come back down and what? And cross through this red line and take out what? The low. Then we have something like this. When price comes down, take this out, then it will go back up, form this, and what? Come down. Not until what? The trend changes. If the trend does not change, you keep on what? Selling. and that is how it works. It continues. Very, very simple as that. And how do we carry out this top-down analysis? When we want to carry out top-down analysis, you don't really need to what to get yourself confused about carrying out a top-down analysis. It's just for you to actually reflect back to whatsoever you learned and what puts all of them together. Let's take for example, we talked about trend lines sometimes ago. Now, when you want to actually use, you can use support and resistance. You can use anything for your watch. You can use anything you've learned for your watch, your analysis. But now, before you actually do this, you are supposed to what to check the trend. Are we bullish or are we bearish? Now you can see that at this point we are what? We are bearish. Then what do you do? First things first, you can draw your support and resistance line. Now drawing your support and resistance line, you can see that this point is a what? This line, this black line is a what? This is a support. Now at this point, the upper point, this is what? This is what? More like this is more like a what? Resistance. And now remember what I was discussing with you guys on the previous session. I was like, supply and demand is more like an advanced concept of what support and resistance. And price does not what price will not always come and what hit this line, go back up, hit the line, come down, hit this line, and what be stagnant at some point. No, price will keep creating what series of higher highs and lows. But now when you know that price keep creating series of higher highs and lows, when price came down, tap on this, push back up into the resistance. You should know that it's not necessarily that price comes back into the line again. You just look for the nearest supply or other block for those that have gone through the topic we talk about on other block. Price just come back into what that other block, and that is what the resistance point for that particular level. Now you can see that okay, price has actually tapped on this resistance more than twice. Now this is more like what a relatively what equal lows, more like what liquidity, and definitely you should understand that price will just come down and what take it out, and that is how you incorporate everything. So now you should, when you have something like this, when price actually what breaks through this, what do you do? You'll be waiting for what? For price to what? To come back into this point. Then you have your what? Your sell or short position open at this point. Then you'll be targeting the what? The next possible what? Base zone or possible what? Point. Then you have your what? Your stop loss and all ready. Then price can literally come back into there and what and sell down. And that is just the most basic talk on what top down analysis. There is no really what big deal to it. It's just talking more of how you will be able to what, incorporate everything. But now I want to let you understand that you can literally use the candlestick pattern or any type of and all the topics we literally talked about. You can use just support and resistance alone and you get what you want. You can use the candlestick pattern, you still get what you want. But if you can still what put everything together, it would give you what? It will give you more accuracy. And that is how it works. That is that on what on top down analysis. But mind you, if you've not actually gone through the videos we've actually been having previously,